speaking with Geoff Di Felice, co-manager with Marcus at the Endeavour Fund. Welcome, Geoffrey.
Thanks, James. Thanks for having me.
Great pleasure to have you. Geoffrey, macroeconomic shifts, inflation, rising interest rates, and of course the geopolitical circumstances that come and go, they can really impact your opportunity set a lot, I would imagine. So how do those factors influence the investment approach?
Yeah, well, it can seem like if you listen to the media every day that these things are changing almost by the hour or by the tweet. But what we do is sit back and look at what are the long-term structural and inevitable trends that are happening on a macroeconomic and geopolitical basis. And so a few examples of that, we talk about this idea of going from abundance to scarcity. The world's gone through a number of decades where we were laying on the credit card at a government level, a business level, and at a household level. At some point that has to be repaid. And so more efficiency at government, cutting spending is required. We've lived for most of my lifetime in a unipolar world where the US was the largest absolute and military spender, and that's been eaten away, and we're at a world today where that is much shrunken, and from that we can expect a lot more military confrontations. And then finally the inequality, and one of the antidotes to that is deglobalization, and we're seeing that a lot today. And so we think those trends are pretty powerful and will continue for some time. And so how do we respond the portfolio to that? We want to sell businesses that are productivity sellers. We think that no matter what the macroeconomic environment is, if you sell productivity, someone will buy that off you every day of the week. Our businesses are typically everyday needs at the consumer level, so cheap food, cheap content, those types of issues. And then finally, the businesses are well capitalised. So interest rates are higher or lower. These are great businesses that have capital available to invest.
What are some of the biggest misconceptions that investors have about global small companies? I would imagine one of them is the sheer fact that they're a lot larger than what Australians know of as small caps if they look at their own market. And within those misconceptions, how does your experience challenge the conventional thinking around the small cap space?
Yeah, I think if you look at the small companies index pretty much anywhere in the world, on average, they will be lower quality companies. So on average, they'll be more cyclical, they'll have lower profit margins, and they'll have much higher debt. But the important part are there are large exceptions to that, and what we're really looking for are those exceptions, which could be the businesses have very high quality that's as good as much larger companies, typically because they're in a niche. So they might have a market share which is 50, 60, 70 or 80%, very high quality. And oftentimes, really when we were thinking about the Endeavour Fund many years ago, the observation that got us really excited was the quality of the people we're meeting. So we'd meet a company with a $500 million market cap, we'd meet the CEO, the CFO, the COO, and then we'd go and meet a $100 billion company or a $200 billion company. We go, wow, the quality of these people in these smaller businesses far and away exceeds what we're seeing at much larger companies. And ultimately, if the business model is there, if the talent's there behind it, we'll bet on that, and that's really what we do. So look for higher quality businesses in an earlier part of their life with the talent to really unlock them. And you're right, on a global basis, these businesses are much larger than we see in Australia. And some of that is because of just the markets they exist in. And so if you're a disruptive restaurant in Australia, there's a cap at how big your store footprint can be. Whereas in larger markets like the US, if you hit go and do really well, the potential of that business is much higher. And so that's often reflected in some of the size of these companies when they're at that early mid part of their life cycle.
That focus that you have on underappreciated management teams is really interesting, and obviously a lot of it, as you said, is formed by your subjective experience when face to face with these people. But yeah. What other inputs do you have to that? What other do you talk to competitors, suppliers? What else strengthens that conviction you might have that these management teams are A, first class, and B, not well known about?
Yeah, it's been a real journey for us to get better at this over time. We started off just saying, these guys have got a good culture or it's a good management team, but without anything real process or ability to really predict that into the future. And so what we've done is really built a bottom-up process about trying to find the best next generation management team. It starts with culture, so we look for a universal culture which you would recognise in any premiership team or any Olympic gold medal team. Then there's also very sector-specific attributes of the best restaurateur in terms of what they look for. And then we look for capabilities. And so often when a company is trying to go from small to large, they need to grow themselves and bring in new people. And then finally, the execution. So you can say you've got a great culture, you can tell a great story, but ultimately it's execution that wins. And so for us, we're very methodical about listening to what management teams will tell us they're going to do and then measure that very relentlessly about what they actually achieve. And the best companies should have a very small gap around what they say they will do and what they'll actually deliver in the end.
And last question, Jeffrey. How important is it to come to events like the Inside Networks Investment Leaders Forum and not only talk to some of the advisors and wealth groups that you'd like to partner with, but also to pick up on how your peers even in other asset classes are travelling?
Yeah, I mean, it's really vital. I mean, there's some incredibly talented, incredibly smart investors here, and sitting in some of the presentations earlier, some of the attributes that we see in our own market but are in another part of the market is really enlightening and how they're dealing with it. So it's really exciting, and I think it really speaks to the quality of investing talent in Australia, what an incredible industry this is, and what an incredible event this is here to showcase that talent to advisors.
Geoffrey Di Felice, co-manager of the Endeavour Fund, thank you very much for your time.
Thanks, James. Really appreciate it.